Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to dive into today's market action with you. We've got a packed day with tech stocks rebounding, major index moves, and some big picture economic chatter around AI and tariffs. So, let's break it down for all you long-term investors out there, while also touching on the short and medium-term trends to keep your portfolio sharp. Stick with me as we navigate what's driving the markets on February 25th, 2026. First up, let's talk indexes because they're setting the tone for the day. The Nasdaq led the charge with a solid 1.26% gain, showing tech is back in the driver's seat. The S&P 500 wasn't far behind, climbing 0.81%, reflecting broad market strength. Meanwhile, the Dow Jones ticked up a respectable 0.63%, though it trailed the others, and the Russell 2000 added a modest 0.41%. What's interesting here for long-term folks is the Nasdaq's outperformance. Tech-heavy indexes are signaling where the growth is, even as volatility lingers. Short-term, this could mean momentum for risk-on assets, but keep an eye on whether this holds through the week. Now let's zoom into some big winners among large caps. We saw some impressive moves today, with names like Netflix jumping nearly 6% and Western Digital soaring over 7.5%. HSBC also caught attention with a 7.2% gain, showing strength in financials outside the U.S. market. These gains highlight pockets of opportunity, especially in tech and global banking. For long-term investors, these names might be worth a deeper look. Netflix's streaming dominance and Western Digital's data storage play are tied to secular growth trends. Short-term, though, these pops could face resistance if broader market sentiment shifts. On the flip side, not everyone had a great day. Among the large-cap losers, Lowe's took a hit, dropping over 5.5%, likely tied to weaker-than-expected guidance despite beating earnings. Mercado Libre also stumbled, down more than 8%, reflecting some regional or operational headwinds. And Diageo saw a brutal 15.6% slide, possibly due to tariff concerns impacting global consumer goods. For long-term holders, these dips could be buying opportunities if fundamentals remain intact. Lowe's is still a home improvement giant, but in the near term, these stocks might face more pressure until clarity emerges on macro risks. Looking at the market movers, Nvidia continues to dominate trading activity with a modest 1.4% uptick, underscoring its role as an AI juggernaut. Microsoft also made waves, climbing nearly 3%, while Tesla gained close to 2%. These heavyweights are shaping market sentiment, and for long-term investors, they're core holdings to consider for exposure to tech and innovation. In the medium term, their performance could hinge on upcoming earnings or AI-related developments, so keep them on your radar. Diving into the most active stocks by volume, Nvidia again tops the list, showing just how much investor focus is on AI and chips. Netflix also saw heavy trading after its strong day, and Intel popped up with a 1.65% gain amid high activity. This volume tells us where the action is, and for long-term players, it's a reminder that liquidity in these names offers flexibility for entry or exit. Short-term, high volume could signal volatility, so tread carefully if you're making quick moves. Now, let's pivot to some broader economic news shaking things up. There's a lot of buzz around AI today, with tech stocks shaking off earlier panic over a so-called doomsday scenario where AI could spike unemployment to 10%. Investors seem to be shrugging off those fears for now, focusing on the growth potential instead. But here's a nugget for long-term thinkers. While AI offers massive upside, disruption risks in sectors like software and finance are real. Reports suggest companies are already cutting jobs to pivot investments toward AI, so diversification across industries remains key. In the short term, this fear-then-recovery pattern could keep tech volatile. Another hot topic is tariffs, with President Trump's latest policies stirring the pot. After the Supreme Court struck down some of his broader tariff powers, new global tariffs of 10 to 15% are rolling out, impacting everything from silver prices to U.S. manufacturers. For long-term investors, this uncertainty could weigh on sectors like consumer goods and industrials. Think about hedging with defensive plays. Near-term, markets might wobble as companies adjust to these cost pressures, so expect some choppiness in the S&P 500. Bitcoin's also making headlines, climbing toward the 70,000 mark as equities rise. This crypto surge ties into broader risk-on sentiment, especially with tech leading the Nasdaq higher. For long-term portfolios, crypto remains a speculative add-on, but if you're dabbling, this momentum could signal a medium-term breakout if it sustains. Just remember, volatility is the name of the game here. Shifting gears to earnings, it's a busy week with some heavy hitters reporting. We've got names like Nvidia, Salesforce, and Lowe's already out with results, and more like Intuit and Domino's in the spotlight. Lowe's beat expectations but saw shares slide on cautious guidance, while TJX impressed with a strong beat and still dipped on forward-looking concerns. For long-term investors, these reports are a goldmine for gauging consumer trends and tech spending. Nvidia's numbers could be a bellwether for AI demand. Short-term, mixed guidance might keep sentiment jittery, so don't overreact to single-quarter noise. You can find exclusive earnings transcript summaries on MarketSnap. Let's peek at some weekly movers among large caps. Garmin crushed it with a 21.4% gain over the past week, while AppLovin and Shopify both posted double-digit jumps. These surges point to strength in tech and consumer discretionary, great for long-term growth portfolios if you're betting on innovation. Near-term, though, these sharp moves might invite profit-taking, so watch for pullbacks. On the weekly downside, Genuine Parts tanked over 20%, and Rivian slid 14%, showing cracks in auto and retail sectors. For long-term holders, these could be value plays if you believe in a rebound, but short-term, they're under pressure from macro headwinds like tariffs and softening demand. Wrapping up with sectors, industrials topped the charts with a 2.12% weekly gain, followed by consumer cyclical at 1.62%. Energy also shone, up 4.62% over the week, likely tied to geopolitical tensions. Long-term, energy strength could be a hedge against inflation, while industrials benefit from infrastructure tailwinds. Short-term, these sectors might ride momentum if macro data stays supportive. On the weaker end, healthcare lagged with a 0.62% weekly drop, and utilities dipped slightly at 0.08%. These defensive sectors are feeling the heat from rotation into growth areas. For long-term investors, this could be a chance to scoop up stable names at a discount, though near-term weakness might persist if risk-on stays dominant. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate your investment journey. Be sure to stay engaged with us for more daily summaries and in-depth SWOT analyses to keep your strategy on point. See you tomorrow for the next update.